ಕೇಳುತ್ತಿರುವ ವ್ಯಕ್ತಿಯು ಇಲ್ಲ, ದಯವಿಟ್ಟು
Yes, those who are online, can you confirm? Is my audio fine? Quickly respond, is audio okay? Those who are online, confirm. Okay, so can we start the class? Quickly respond. Good to go. Yes, good evening to all of you. So we are in the last session of ratio analysis. We are left with a bit of discussion for which we have decided to have this special session, and also, as I told you in the previous session today, the last session in the class, that we will be discussing something related to stock market as well. Yeah. So quickly reply. We need to start from profitability ratio related to, correct, analyst from owner's point of view, page number 244. Is that correct? Ratio number 29. Yes. All right. Okay. So the most common formula that most of you know very well, EPS is earning per share, which is earning available to equity shareholders, ETH divided by number of equity share, the simplest formula. And we have done a lot of questions on computation of EPS. I don't think this will require my further explanation. Yeah. Moving on. DPS is dividend per share. Please understand, whatever is the EPS, earning per share, that is not to be understood as amount that will be transferred from company's bank account to shareholders bank account, correct? Company will earn 7 rupee EPS. That doesn't mean shareholder will receive 7 rupee. Out of that 7 rupee, company may decide to keep some reserves, maybe 6 rupee, and pay only 1 rupee dividend, correct? So what is DPS now? Total dividend to all equity shareholders divided by number of equity shares. If you see the numerator, the previous formula numerator was earning available to equity shareholder. Now it is only the dividend paid. That means the balance will be reserves and surplus, or as we call it, retained earnings, right? Divided by number of equity shares. Suppose a company has earning available to equity shareholders of say 10 lakh rupee. Okay. Now out of 10 lakh rupee, they may decide to distribute just 8 lakh rupee. Yes. Now when you do 10 lakh divided by, let's assume 1 lakh shares, then your EPS is rupees 10. Out of that, if they're paying 8 lakh rupee, 8 lakh divided by 1, now rupees 8 is dividend per share. If you see ratio number 31, it is continuation of the last two ratios. Observe the formula. It is DPS by EPS into 100. You pay 8 rupee dividend out of 10 rupee earning. Able to follow? Observe the previous two numbers. 8 rupee dividend out of 10 rupee EPS. So when you do DPS by EPS, you're actually doing 8 by 10 into 100, and that gives you what? 80%. Tell me, if 80% is considered as dividend payout, can I say 20% should be understood as reserve? I repeat, 80% paid as dividend means 20% kept as reserve. Simple. This 20%, we don't call it as reserve ratio. In FM, we call it as retention ratio. Retention ratio. Yeah. So simple. If you want to create a formula for retention ratio, tell me it should be simply 1 minus dividend payout ratio. Correct? If dividend payout ratio is 80%, 80% can be written as 0.8. Then how to do retention ratio? Retention ratio is 20%, and what should be the formula? 1 minus 0.8. 1 minus 0.8 will be 0.2. 0.2 is nothing but 20%. Okay, simple. DPS by EPS into 100. This will give you dividend payout ratio. Yeah. And what is not paid as dividend is kept as reserve, and that is called retention ratio. Not reserve ratio, retention ratio. If 80% is paid, then 20% is kept as reserve. Simple. Okay, moving forward. Profitability ratios related to market, stock market, valuation, and related to investors. And I will show you all these ratios on website. You can go to moneycontrol.com, you can go to Business Standard, you can go to any of these share market related websites. Money Control is the easy one, simple one for all of you to understand, so I'll be taking you there. And I also told you before watching this session, please keep either another laptop or computer or one more mobile phone with you. Those who are watching the recorded version of this class, please keep another, not the one where you're watching my class, another phone or laptop or computer. Then you will also be able to do what I am planning to show on my screen. Okay. Yeah. And you can mark those. There's something called bookmark in the laptop, in mobile also. And you can keep reading this even in future. Okay. We will do that. First, dividend yield ratio. Understand the meaning of the word yield. Yield basically represents earning ability of anything. Normally we use the term yield with respect to crop. Okay. Land is yielding good crop. You might have come across this. But here we are talking about dividend yield. And what is the formula? DPS by MPS. Suppose I am buying a share by paying 40 rupee. MPS is market price per share. I cannot purchase an equity share at book value unless I buy at the starting point of the company. Yeah, in the initial offer. Unless I buy it at that stage, I won't be able to buy it at par value or face value, right? Face value ratio. Ratio. Able to follow? Yes. Sorry, I think there was a small issue with the internet. Now it is sorted out. Can I quickly get a reply? Can I continue? Can I continue? Okay, let's move on. So I pay 40 rupee and purchase the share, and I earn 2 rupee dividend. So it is 2 by 40 into 100. Perfect. Next one, earning yield ratio. Can you just see ratio number 32 and 33? One thing common in both is you're calculating yield. Okay. So if you see denominator here also is market price, here also market price. Becomes easy. In the previous formula, it was dividend yield ratio, DPS by MPS. Now it is earning yield ratio. That means it is EPS by MPS. Okay. Is there a problem with now it is earning EPS by MPS? Okay, I think I'm good to continue. I'm proceeding. Yes, please. Sorry, I repeat for those who had issue with the audio. I purchase a share today in the market and we call it as what? MPS, market price per share. Yeah. For both formula number 32 and 33, denominator is same 40 rupee. Market price, I'm just taking an example. I am going to earn a dividend of 2 rupee, so it will be 2 by 40 into 100. But company's EPS may be 5 rupee. Just now I explained in the previous page 5 rupee EPS and 2 rupee DPS. So this will be 2 by 40 into 100. That is your dividend yield ratio. And this will be 5 by 40 into 100. In Calci, can you quickly do it? Tell me 2 by 40 into 100 is giving you 5%. Whereas 5 by 40 into 100, I think that's giving you 12.5%. Is that correct? 12.5% is earning yield ratio, whereas 5% is dividend ratio. Yes? Next, price earning ratio. This is also called as PE ratio. Price earning ratio is also called as PE ratio. In your textbook, right here, PE multiple. Right here, PE multiple. Everybody. Price earning ratio is also called as PE multiple. Okay. Now observe the formula. MPS divided by EPS. Sir, it is reversal of 33. Correct? Exactly. Reversal of 33. This will be 40 rupee MPS by 5 rupee EPS. Now, this is measured in times. So when you do 40 by 5, you get 8. And this should be understood as 8 times. Everybody, very important. Market price of the share is 40 rupee. As an investor, if I buy that share today, I'm going to have earning per share of 5 rupee. I'm doing 40 by 5, not into 100 because this is measured in times. So the answer is coming to 8 times. Understand the correct meaning of 8 times. I am paying 8 times of what I am going to earn. I repeat, I am paying 8 times of what I am going to earn. I'll be earning 5 rupee. 8 times of 5 rupee is 40 rupee. I hope you are able to understand. I am going to earn 5 rupee EPS and I am paying 8 times of 40 rupee. 8 times of 5 rupee, that comes to 40 rupee. Yeah. Can you answer with a yes or no? A very high PE ratio. A very high PE ratio. What is the meaning? I am thinking, sir, if the PE ratio is very high, then shareholders or investors are ready to pay huge money to purchase that share. Shareholders are ready to pay huge money to purchase that share. Am I correct? To earn 1 rupee EPS, they are ready to pay 23 times, 25 times, 45 times, 145 times. That means people are willing to pay so much to purchase the share. On the other side, people also say if a PE ratio is extremely high, then you should avoid buying that share because it is considered to be very costly. I hope you are understanding. If PE ratio is extremely high, then what does it mean? To earn 1 rupee EPS, I'm paying 37 rupee, 85 rupee, 135 rupee. An extreme high PE ratio is considered that either the company is so good company or people have unnecessarily hyped that company. It's a message of caution also. Therefore, before buying any share on that day, you make sure you check its P ratio also. There is something called industry average P ratio. Industry average P ratio. Today in the class, we did one question. We compared Navya Limited to the overall industry. Correct? Same way, compare one company, the share that you are planning to buy, with the industry average P ratio. If I am planning to buy Ultratech Cement share, I should compare with the cement industry average P ratio. how much is the P ratio of ACC Cement, Dalmia Bharat, Indian Cements, all of this. Compare that with Ultratech. If industry average is 23 and Ultratech is 47, follow the numbers. Industry average P is 23, but the Ultratech that you're planning to buy is 47. Either the company should be so good or it is too costly to buy. At that point, we should not invest. Maybe if the company is good, wait for some time, for some bad reasons or some bad quarterly results or some announcement by government for some reason. If the PE ratio falls, that means MPS comes down a bit, then maybe that's a good opportunity to buy. Sir, is there something as ideal PE ratio? Answer is no. It is investors' willingness to pay. To earn 1 rupee EPS, some people are paying 10 rupee, some other company may be 12 rupee, some may be 45 rupee also. I will show you on screen some P ratios. Okay, you will get some understanding how you should also check this. Yeah. Okay. Next one, market value, book value ratio. Market value, book value. Simple. If you observe, numerator is market price per share. Say 40 rupee. I'm continuing same example. Divided by book value per share. There is one small difference in accounting and finance. When we say book value here, we are not talking about just face value. Okay, we are talking about face value of share, face value of share plus reserve per share, face value of share plus reserve per share. Now, what is reserve per share? Total reserves and surplus divided by number of shares. Total reserves and surplus divided by number of shares. So, book value is not equal to par value. Par value say 10 rupee share. But if the reserve per share is 3 rupee, then 10 plus 3, 13 is counted as book value per share. Example, this is 13, 1 3. Now, what is the meaning? Market price of the share is 40 and book value is 13. Again, this is measured 40 by 13 in times. This is coming to around 3.00 something, roughly 3 times. What is the meaning of 3 times now? People are ready to pay 3 times of the book value for the share. Follow? People are ready to pay 3 times the book value of that particular share. Yeah. Make a note here. This is also called as price to book value ratio. Price to book value ratio. Price to book value ratio. Make a note, please. Price to book value ratio. Some websites write like this: P/B. P/B. Price to book value. Price means market price. Book value is available in balance sheet. Sir, if I want to calculate this, how do I calculate? Suppose it's a listed company. Then go to stock market and search that company name, or go to Google and search that day's share price. You get MPS. How to get the book value? Go to their balance sheet, latest balance sheet, latest available balance sheet, and all the listed companies. Okay, I will show it now on Money Control website. All the listed companies will have to publish their quarterly results, not only end year results, annual results. Anyway, they have to do, but they also have to do quarterly results. Yeah, some will be audited, some will be unaudited. You will see both. Correct. Now, suppose we are in the month of say July, April, May, June quarter is done. April, May, June, that quarter, that 3 months quarter period is done. We can't expect audit to happen in first 3, 4, 5 days of July. Correct. So you can publish unaudited numbers also, but it is important, mandatory, not just important, mandatory to publish every quarter the financial statements. Okay, so you can take the latest balance sheet. From there, you'll get to know the book value per share. So, how to get the market price? Go to stock market on Google, you search, you will get to know. Or if you have Demat account, you search that company name, you will get to know that day's price. Book value, from where do I get? Go to the latest available balance sheet. Correct? Okay. Now that we have learned all this from book, let me show these things in reality. Okay, everybody, please go to Google and type moneycontrol.com. Okay, I will wait you will get a screen something like this. You may be getting a different ad, but that's okay. Yeah. Here, I want a quick reply from everyone. Have you opened Money Control website? Yeah. There is a search code. Okay, here you need to type the company about which you want to know about. Yeah, I will show you one or two companies. Same thing you can also repeat. I will give you few names of the companies. I want you also to spend some time today and make a summary of whatever we discuss. Okay. Yeah. I am searching here. Say Maruti Suzuki. And you also Maruti Suzuki India. You'll get something like this. When you type Maruti Suzuki, laptop or computer, if you have, this is how your screen will be. In mobile phone, it may look slightly different, but that's okay. Yes. So this is the number today. Okay, ads keep coming up. Don't worry. Yeah. Scroll down little bit. You will reach to a screen like this, just above the chart. I hope this is ready. Just above the chart, you will have overview, something like this. Okay. Now, see, this is the way to read these numbers. I will be explaining everything now. Okay. You can replay this video after the class also and spend more time later as well. Open means the rate at which this stock opened today, 12,585 rupee per share. Previous close meaning yesterday's close at 3:30. Yesterday or the previous trading day. Today is Monday, so it is Friday evening closing. Volume is number of shares traded today. How many shares were bought and sold? Okay. Value in lakhs, that is how many shares got traded multiplied by at what rate. Number of shares traded into the rate. Okay. Some of this you will not understand now. Don't worry. There is something called beta 0.84. This beta we will study in cost of capital chapter. As of now, you don't know what is beta. I have explained once or twice in the class. I know only the name was taken, but formula to calculate beta and other things we will study. Don't worry. Market capitalization. If you remember 3 days back, I told you market capitalization is number of equity shares into market price per share. Yeah. Now don't multiply this 187,230 shares. That many shares got traded today. So market capitalization is total number of shares that this company has. Okay. Into market price per share. This is 3,96,000 and this is in crores, by the way. Misunderstand. 3,96,000 crores. That's the meaning. Okay. High, low, that is days highest price 12,734 and this is days lowest price. Yeah. There is something called upper limit, upper circuit, lower circuit. Some of this is not necessary for intermediate. Don't worry. Guys, whatever is not needed or what you will not understand at this stage, I may not spend time on that. Don't worry. Okay, whatever you can understand, what is part of your syllabus, I will explain. Okay, 52-week high means in last 52 weeks, basically 1 year. What was the highest price it ever reached in last 52 weeks? 13,541 rupee. And 52-week low, this is the lowest price this share saw in last 1 year. Okay. Now, before buying any stock, that day you check what is the ongoing price, 597. And what is the all 52-week high? If this ongoing price is very near to 52-week high, then you should understand that this stage is very costly. You are buying it at, you understand? You are buying it at 52-week high. Maybe you'll have to just wait. I'm not saying it's a bad share to buy, but why to buy it at a high price? You can wait. Whenever the price falls, you can buy. Correct? Next 52-week low. That means it has never gone below this in last 52 weeks, 1 year. Face value of the share is 5 rupee. Yeah. Next you have something called all-time high. That means in its full life, this share, the highest price it reached was 13680. All-time high means from the time it is in the stock market. All-time low 155 rupee. Now please don't compare this 13680 with 155. This 155 maybe 25 years ago. Correct? That's a wrong comparison to do. Understand? Next, 20-day average. These things you don't need. I've already told you. Whatever is not needed, I'll just skip. Book value per share. Something that we discussed just now in the last ratio. Now, how do you get book value per share? You need face value plus reserve per share. Dividend yield. Same formula that we studied 5 minutes back. How did they reach 1.07? Dividend divided by market price per share into 100. So this 1.07 should be understood as 1.07%. Sir, one doubt here. By investing in this company, I have to buy at market price. And what is the yield that I am getting? 1.07%. Sir, bank FD can give 5-6%. So why should I buy this share if the dividend is only 1.67%? Then understand one thing. People are not buying share only for dividend. They are also buying for capital appreciation. What is capital appreciation? You would have bought it at a particular rate. Today, it would have gone up by 3, 4, 5%. So that 5% is appreciation plus 1% is dividend. Together is your rate of return. Together is your rate of return. In mind, put a formula like this. I bought it at 100 rupee 1 year ago. Today share price is 112 rupee. 100 rupee, 112 rupee. That means there is 12 rupee capital appreciation, and during the year I am earning or I have earned 3 rupee dividend. That means 12 rupee capital appreciation, 3 rupee dividend, 12 plus 3 I earned 15 rupee 15 divided by how much did I invest? 100. So 15 by 100 will be 15%. That is the rate of return. So people don't invest only for the purpose of dividend. They invest also for capital appreciation purpose. Yeah. Next, TTM EPS. EPS, you know, TTM is trailing 12 months. Trailing 12 months. That means last 12 months only they have counted. 462 rupee is EPS. TTM PE. What is PE? Price earning ratio is 27.25. Just now I discussed what is the meaning of P ratio 27.25. People are ready to pay 27.25 rupee to earn 1 rupee EPS. I hope you are able to follow. What was the formula for P ratio? MPS by EPS. If it is 27.25, it is 27.25 divided by 1. That means to earn 1 rupee EPS, people are paying 27 rupee. And here, I hope you are able to see on my screen or at least in your mobile phone, there is something written as low PE. Now, how did they decide low PE? It is based on the industry comparison. Maruti Suzuki is a car company. That means they would have compared it with other car companies like say Tata Motors and others. That average, when they compare, they believe that Maruti Suzuki's PE ratio is slightly lower. I'll show it to you which are the companies that they compare also. Yeah. Next, P/B. Just now we wrote price to book value is 4.45. This is market price of the share divided by book value of the share. And this number, please remember, today is 11th August 2025. Okay. If you are watching this video on some other day, you may have different number on your screen because that day price is changing. Able to follow? Therefore, you may not get the same numbers when you watch this recording sometime in future. This is the number applicable on 11th August. Okay. Now see this sector P. What is the meaning of sector P? This company is into automobile, cars, correct? So they have calculated average P of all other companies in car industry, and that is 30.64. You can see here 30.64. Compared to that, this company has 27.25. Now you got to know how they decided low PE here. Every other company, on an average, people are paying 30 rupee to buy a share of. People are paying 30 rupee and their EPS is 1 rupee. But here people are paying only 27 rupee. That means it is not as costly as other companies in the market. Yeah. Coming further. Here, this is overview. Next to that, there is something called chart, forecast, money control, insight, and so on. Okay. Here, if you come to news section, it will show you everything about Maruti Suzuki, whatever is the latest available news. Yeah, maybe they acquired another company, they're planning to announce some dividend, they had a board meeting, they took some decision. Any news about the company or the latest quarterly results, all of them. Yeah. Yes, you have to scroll back to where we were here. Okay. And some of this, when you click, it may say this is locked. You have to buy subscription to unlock this. That you do not need as of now. Okay. You have to pay money and buy money control expert app license, which you do not need. So don't worry. Anything that comes with this, lock screen, you can see here. You won't be able to open and read that, which is okay. You don't need as of. Okay. This is the chart. Yeah. So you can see here in the bottom from March. Can you see x-axis? From March, April, February, March, April, May up till August. And here for x-axis, you have 3 months, 6 months, 1 year, 5 years, correct? Sir, I have two things on the graph. What is the meaning of two things here? Okay, the bigger graph that you are seeing is the share price movement. Share price movement. The green and red lines that you are seeing is volume. That is how many shares got traded that day. Yeah, if it is in green, then there were more shares that were traded at a higher price. You won't understand all of this. I'm just trying to simplify for you. Okay, this is volume, whatever is in red and green. On top that you see big graph, that is the share price. And you can reduce the time period, 1 year, 6 months, and so on. Okay. Yes. You don't worry about the charts as of now. You don't really need it. Okay, come down a bit. You have a lot of lock marks here. I told you, all of this to open, you need to buy a subscription, which is not needed for. Keep coming down. Keep coming. Further. There is forum. This is where any random person can write any comment section. This post your message, etc. Don't waste time on all this. Then come to this broker research. I need a quick reply, everybody. Till this, whatever I have told you, were you able to follow? Yeah, you can search same thing. Other companies also later. I am taking this example as of now. Quickly respond. You are able to follow till here? Okay. Yes, good. Now, this broker research segment, these companies, okay, Motilal Oswal, Anand Rathi, You might have heard of some of these companies. These companies are experts in stock market. Okay. You can even open Demat account through Motilal Oswal. You might have seen this company board. Sher Khan is another such company. Grow, Upstox, Zerodha, all of this. Yeah. What they do, they hire, they're all brokers, basically apps that you understand, easy language. They hire people who are expert in finance. Yeah. CA, other than CA also, CFAs, MBAs, whoever is good in stock market, they hire people. And they do a lot of studies, okay, about the company, everything happening about the company. And they publish a summary report of 2 page, 3 page, 5 page. And finally, they give a recommendation whether at this price we should buy or not. If you see on screen, there are 6 broker research report and everyone is saying you should buy. Can you see this? What many people do, because everyone is saying buy, all 6 on 6, 100% result correct. So people just go and buy, which is not the right way. That is because people don't understand what is there inside this PDF report. But you can understand after this ratio analysis chapter. Okay. I am just opening any one random report. Okay. I'm just taking this Motilal Oswal report, which is published on 31st July. You should always download the latest one. Sir, on screen, we have 2 Motilal Oswal. Which one to select? Download or click on the one which has latest date. I can see 31st July Motilal Oswal. There is a PDF that I can see. I clicked on it. Okay. So if you see here, Motilal Oswal company on 31st July, they made some research on this company stock and they have published this report. Again, you shouldn't buy just because they said buy. You have to read and understand. At intermediate level, you may be able to understand, say, 40-50% of this. No problem, but good to read. Maruti Suzuki CMP's current market price 12,608. By the way, this is based on 31st July. Yeah. TP is target price. They believe the stock can go up to 14476. They're expecting it to go up by 15%. 15. Yeah. Therefore, they're suggesting you should buy. Can you see all this on top of the document? Whoever has doubt, you can ask at the end. Yes. Now, they have given the detailed reason, okay, which you can read, why they think this share should be bought, what are the good things that happened with the company, everything. And then here you can see lot of ratios on one side of the screen. I will just be zooming it now. Okay. Come down here. Financials and valuations. Can you see? Financials and valuation. Everything in rupee. B is billion. Yeah. So they have given sales. 2025, this is actual figure. 2025, when you see, it is year ending 31st March 2025. That means this is financial year 24-25. That's how you should understand this. Okay. Now, 1519 is the same. 2026 E means estimate. Wherever you see capital letter A, that is actual, E is estimate. They're estimating next 2 years turnover to be 1673 and 1878. And then they have done EBITDA calculation, earning before interest, tax, depreciation, and amortization. I have told you this in the class. 178. Then they have done PAT 140, EPS, earning per share 444 rupee. EPS growth, earning is growing at 5.6%, and book value per share is 2991. BV by number of shares, so book value per share. Okay. And then remember all this we discussed today in the class. ROE is return on equity 14.8%. Earning available to equity shareholder divided by equity shareholders fund into 100. ROCE is return on capital employed, which is 20.3%. Able to follow this? I'll zoom it further if you want. And then PE, PE ratio, PE multiple. Just now you saw MPS by EPS 28.5. Sir, this was not the number when we checked on Money Control website. Guys, I told you something. Money Control website data is based on today's market price. Today is 11th August. And this report was done on 31st July. So they would have taken that day's number. Okay. So if you are watching this video some other day in future, that day Money Control will have some other answer, obviously. Correct? P by BV is price to book value. Price to book value. Okay. EV to EBITDA, you don't have to worry now. This is for CA final. For those who want to know, EV means enterprise value. Enterprise value divided by EBITDA. You don't need this at inter-level. Don't worry. Dividend yield, you know what is the meaning of dividend yield. DPS by MPS, 1.1 to be understood in percentage. Anything you see in bracket as X, it should be understood as multiples. 28.5 times 4.2 times 18.3 times. Anything in percentage, you know it is 1.1%. Okay. Then you have something called shareholding pattern. Who is holding the shares of this company? Promoters. Promoters are the people who started the company. Yeah. Or their family members and so on. Mainly the original idea, whoever had that. Yeah. Like in Reliance case, it will be Ambani's name. DII is domestic institutional investors. Yeah. This is all the Indian mutual funds, Indian insurance companies, Indian banks. FII is foreign institutional investors, foreign mutual funds, foreign insurance and all of that. Others, that is you and me, general public, 3.2%. Okay. So this is the shareholding pattern. So many people have shares. And this is the story about why Motilal Oswal believe that Maruti Suzuki is a good company. They have given all the explanation. Sales have gone up, margins have improved, sales are better than last year, better than competitor. See this management commentary. This will be given by the directors of the company. Okay. Yeah. They have given industry outlook. Industry outlook, when you see, you must understand they're talking about whole industry, not just the company. Read this. Domestic vehicles have seen a weak demand in quarter one, down 1.4% year on year. However, management is hopeful of a demand revival of the vehicles in quarter two, second quarter, third quarter, led by festive season and positive rural sentiment. If you remember, I discussed these things in class also. During festival, gold, silver, and all the vehicles, car, bike sales will be up. So they are hoping that the coming quarters there will be good sales also. They've also given about MSIL is Maruti Suzuki India Limited. So how many vehicles have been exported and what is the growth, etc. This is the overall story. Okay. And further, if you come down, a lot of numbers. Yeah. This can be slightly difficult for you to understand everything in one go. But no problem. Spend time. Do it slowly. See what they have done. They gave quarterly performance. Yeah. Financial year 2025. Okay. Quarter 1, 2, 3, 4, and so on. Again, 26 estimate. Yeah. And here you can see volume is number, change in percentage. And then you have something that you know, RM cost as a percentage of sale. How much of selling price, if say one car is sold at 10 lakh rupee, they're saying 70% of 10 lakh is raw material cost. Staff cost is labor cost. Other cost, this is all your overheads. So if you just add 70 plus 4, 74 plus 12, about 86% is cost itself. The balance 14% is EBIT margin, EBIT. And then you have EBITDA margin, EBIT margin, interest, you can see here 0.6, non-operating income. Just today's class we discussed non-operating income is that income which is not related to your day-to-day business. Remember? Yeah. And tax PBT, and using the tax rate they have calculated PAT, profit after tax. This they have shown for all quarters, Q1, Q2, Q3, and also FY. This is for full year. Okay, these are 4 quarters of FY25. Then estimate 4 quarters and FY25. This is full year, and FY26 full year, but you have E. That means this is estimated number. Okay, coming down. Then they have made some highlights, the important points for investors to look into. And then there are volume trends. Volume is how many vehicles were sold, number of cars, basically that. Yeah. Some of this you won't understand, don't worry. EBITDA, they basically put whatever you saw in the table, they present it in graph and chart format. Okay, come down further, keep coming down. Lot of charts and other things, sales growth, margins and other things. Yeah, see this. They have given again last, you can see 5 years, 2020, 21, 22, 23, and so on. This gives you an overall idea where the business is growing. Can you see net operating income in the year 2020 was 7,56,000 INR. M means million, 1 million is 10 lakh. Same way 2021, 22, 23, and so on. Today where we are, this. So next 2 years are estimates, 26 and 27. Okay. Same way also the balance sheet, 2020, 21, and so on. Share capital, reserves, loans, you can see capital employed, fixed asset, depreciation, capital work in progress. That means assets under construction. And then you have inventory, debtor, cash, loans, and other things. And then current liability, creditors, provisions. So this is basically the overall balance sheet summary. If you come to this page, financials and valuation, here you have all the ratios that we are discussing. Okay, you have book value per share, DPS, just now I told you, dividend per share, total dividend divided by number of equity share. Dividend payout percentage, can you observe here? 32%. What is the meaning? Dividend payout percentage, whatever is the EPS, whatever is the EPS, in that 32% is paid. Now, if 32% is paid, the balance 68% is going to reserves and surplus. Are you following? 32% is payment ratio. That means balance 62% is retained earnings, reserves. Yeah. Okay. Valuation PE. PE multiple, price earning. Okay. By the way, first number is 2020 number. If you want 2025 number, you have to see here this. Correct? I hope you're able to see on screen. 2025 here at the end. Yeah. Next. Some of this you won't understand now. Enterprise value to EBITDA, enterprise value to sale. P/B is price to book value. Dividend yield, and FCF is future cash flow or free cash flow. You don't need this. This is not for your syllabus. Don't do it. Turnover ratio. This is what we did today. Can you see this? Debtor in days. Yeah. 11 days, 7 days, 9 days, 11, 12, 16. What is the meaning of debtor in days? If they sell something today, on an average, they're able to collect within 16 days. Correct? 11 days. Inventory turnover ratio. You can see 17, 16, 15, 12. That means if they make the final product ready, once it comes to showroom, it is sold within that many days. Sir, so many days you are saying, but these numbers are very small, like 12 days, 15 days, 14 days. How come they're able to sell the car within 12 days, 14 days, 15 days? That's not fully correct. Most of you may know, if you go to a car showroom, it's not that you go that day and they will give you a car. They will first take a booking and then they will call you after a few days and confirm when you can go and collect the car keys, collect the car. Correct? So most of the times they know the season. Based on that itself, they will produce. They won't produce and keep it ready and wait for customers to come. Correct? That is why the number of days are less. Credit hour days, you can see this is the number of days they are taking to pay to their suppliers. Working capital days, this is called operating cycle period. We will study this in working capital management chapter. You won't understand it today. Asset turnover in bracket X, that means it is number of times. If you remember in class yesterday and today we have discussed 1.5 times, 1.3 times. What does it mean? From 1 rupee asset, they're generating 1.5 rupee turnover. Correct? Then you have debt to equity, and again there is cash flow statement. I think some of you have studied this, some of you will study this in future. Cash flow statement is part of your account syllabus. How to prepare this you will learn. Okay. And then some summary, and this is about Motilal Oswal, and the document is over. Now this way, I'm going back to Money Control website. I just showed you one report of Motilal Oswal. You can click on other reports also. This was Devin Choksi research on Maruti Suzuki. They have also published. Yeah, you don't have to read everything, but learning purpose as a sample, 2-3 different companies, 2-3 different PDFs you can download and go through. You won't understand everything, I've already told you, but whatever is there in the chapter, at least you can search here. Correct? So this way, any company you go, you will get this broker research reports. And the one who is preparing broker research report is using the same chapters that we are studying. Risk and leverage, cost of capital, working capital, the ratio analysis chapter, and so on. This way, any company you want to know, yeah, you can come here. If you come down corporate actions, any latest announcement they made, board meetings, when was the last board meeting and what was discussed, dividends, see this, dividend dates are given and amount is given, bonus, when was the bonus share, no data for bonus, that means they never give bonus, stock split, we will study this in dividend chapter. Okay, AGM, EGM, when was the AGM done, when was the board meeting done, all of this. Financials, when you come here, it will show you income statement, basically P&L account, balance sheet, you know, cash flow statement you will study, ratios, the same thing that we discussed in those broker reports. Even Money Control has done those calculations. EPS, book value, dividend, face value over last 5 years. And here you can see under the ratios, you have different varieties of ratios. You can click on turnover ratio, it will show you asset turnover, inventory turnover. You click on valuation ratios, you have price earning, price to book value, all of this. You can see 5 years. Always see the latest year data, latest and immediately previous. That comparison is enough. We are in 2025, check 2025 and 24. If you go back 5-6 years, now you'll get confused. 2 years comparison is easy also. And shareholding, and this is something that you saw in the Motilal Oswal report also. Promoters, FIIs, DIIs, and so on. Peers, when you see this, peers is similar companies. See what they have done? They have prepared a small table that compares this company with other 4-5 companies. Okay, Maruti Suzuki, Hyundai, Mercury EV, Hind Motors, and if you click on see more, you'll get few more companies. Basically, comparison. What is the price of the share, percentage change compared to yesterday, market capitalization. TTM is trailing 12 months, basically latest 12 months. P ratio, price to book value, P bar B, return on equity, we're able to see. Sorry. Return on equity, 1 year performance, how much is the net profit, how much is the sales, and debt to equity ratio. And tell me, Maruti Suzuki, when you see these numbers, return on equity 15%. Now this can be compared with Hyundai Motors, 34%, in Motors 48%. Now this is a correct comparison because you are taking one car company with comparing with another car company. Yeah, so randomly comparing two companies won't help. You should never compare Maruti Suzuki with Wipro and say this is a better share compared to that. Totally wrong. If you want to compare Wipro, it should be TCS or Infosys or HCL Tech, something like that. Yeah. About the company, some story about the company, their products, and where is the company's head office, phone number, etc., which you don't have to go through. So this way, this is one company in Money Control, and you saw so many PDFs, and there is so much that you can read about a company. So whoever is planning to buy any share, or at least planning to learn about stocks, this is the way you can also do your own reading, your own research. By the way, so much of data is done by them. You only have to see and compare. Correct? I can go on and keep downloading every report like this, and we can continue discussing. Yeah. I hope you have followed whatever I told you in last 30-40 minutes. Can I get a quick reply in the chat box? Are you able to follow? You can also spend some time same way. Yeah. Not tough. You don't understand everything, don't worry. Whatever is there in the syllabus, that at least you can try and read and understand. Okay. Yes. All right. So you can on top here, you can search any company, Swiggy, Zomato, any company. Swiggy's 400 rupee today share price went up by 4% single day. Again, same way. Overview you get, chart you get, correct, monthly chart, yearly chart, and then there are people who have done their research, news about the company. See this. Broker research. Anand Rathi says buy. ICICI Security is saying buy. Motilal Oswal is saying neutral. That means they're not suggesting anything, neither to buy nor to sell. If company is in a very bad shape, then you will see here instead of buy, they will write it as sell. If you're already holding, they're saying don't keep it longer, just sell. You can download, you guys can also read. Okay, all right, perfect. Let's get back. I think we finished all the ratios. If I'm correct, there is one last small sum. Am I right? One sum we have. Question number 20, page number 254. Everybody in your notebook, please. It says capital structure of Beta Limited is given to you. Equity share capital 8 lakh rupee, 9% preference shares 3 lakh rupee. That means on 3 lakh you have to pay 9%. Simple. Total is 8 lakh plus 3 lakh, 11 lakh. Additional information, profit after tax is 2,70,000 PAT. Depreciation is 60,000. This is actually continuation of this sentence. Equity dividend is 20%. Whenever you see like this, equity dividend is always paid on par. 8 lakh rupee into 20%, that will be 1,60,000 total equity dividend. Sorry, if I want per share, how much is per share par value? 10 rupee. On 10 rupee, you apply 20%. You will get 2 rupee. That's the mean. Market price of the share 40 rupee. You know how to get market price of the share. Correct? Available market price on that day. Yes, you are required to compute the following, showing the necessary workings. First, they want you to do dividend yield. Please start. What is the formula for dividend yield? DPS by MPS. Question 20. DPS by MPS into 100. Answer will be in percentage. Tell me, you have the book with you. How to calculate DPS? 10 rupee face value, 20%, correct? That means this will be 2 rupee by market price of share is 40. Is the answer 5%? 2 by 40 into 100. 2 rupee dividend. Don't do this mistake. Dividend is not on market price. Whatever percentage is given, that should be applied on the face value of the share. So next time when you see any news channel saying the company declared dividend of 80%, don't check market price and multiply 80%. 80% is on face value. Face value may be 10 rupee. 10 rupee, 80% is what? 8 rupee dividend. That's it. Yes, sir. Second one, coverage for preference and equity dividend. Morning we discussed any coverage when you calculate preference and equity dividend, they're saying whether preference dividend and equity dividend, are these people whether they are going to get their money or not. Now, when you say preference and equity dividend, this money has to be paid from EAT. Everybody think, I cannot say EBIT is there. Using that money, I can pay preference dividend and equity dividend. From EBIT, I have to pay interest first. I will get EBT. Then I have to pay taxes. I reach EAT. In EAT, using that EAT, I can pay preference dividend. I can pay equity dividend. That means for this coverage, what is the way to calculate? How much is earning after tax divided by how much is preference dividend? But in this question, they haven't asked only preference dividend. They have asked even equity dividend. Read there. It says preference and equity dividend. Preference and equity dividend. Yes. EAT means PAT. That PAT number was already there in the question. How much was PAT? 2,70,000. Yes, sir. 2,70,000. To be divided by preference dividend plus equity dividend. Preference dividend plus equity dividend. How to find out preference dividend? See this. How much is preference share capital? 3 lakh into what is the percentage? 9%. I'm highlighting 9% on 3 lakh. How much is 9% on 3 lakh? 27,000. Is that correct? 3 lakh into 9%. Yes, 27,000. So take this here. This is preference dividend. But we have decided we will also add equity dividend. Yeah. How much is equity dividend? Sir, they said 20%. Correct. 20% is to be applied on par value. 20% on 8 lakh. Now I'm not doing per share, I'm doing total. How much is 8 lakh into 20%? 1,60,000. Am I correct? 160,000. Yes, sir. So 160,000. Now, if you see 2,70,000 is money available, and I have to pay 187,000 dividend. I hope you are understanding. I have 270,000 and I need to pay 187,000. This answer will come to 1.44. What is the meaning of the answer greater than 1? Meaning of the answer which is greater than 1. Sir, you have enough money to pay preference dividend also, equity dividend also. Correct? If it is exactly equal to 1, what does it mean? Sir, you have exact money which you can use for paying preference dividend and equity dividend. What if answer is less than 1? So first you pay preference dividend. Correct? Then if something is left out, you can pay to equity dividend. Obviously, out of these two, I have to pay to preference shareholders first. So I will pay them full money. Then who will have to kind of adjust? Equity shareholders only. And this is a common answer in every question. Every time only equity shareholders will have to compromise. Only equity shareholders will have to compromise. So to call it good ratio, it has to be greater than 1. That means both the shareholders, preference people as well as equity people, will get their dividend. If it is exactly equal to 1, they will still get, but nothing is left for reserves. Now that you have more than 1, that means you can first pay preference dividend, then you can pay equity dividend, then there will be some more money left. Yes, sir. Okay. Next question is work out EPS. EPS is easy for you. So question C. EPS is equal to earning available to equity shareholders divided by number of equity shares. Earning available to equity shareholder divided by number of equity shares. How to find out this number? Sir, we have EAT just now, correct? How much is the EAT number? 2,70,000. From 2,70,000, we have to first pay preference dividend. Yes, sir. How much is the preference dividend? 27,000. From this, if you take out 27,000, what do you get? Earning available to equity shareholders divided by number of equity shares. Where do we have number of equity shares? So here, first line, if you see, equity share capital of 10 each, and then they said 8 lakh rupee. Now, if amount is 8 lakh and one share is 10 rupee, I can do 8 lakh by 10. 8 lakh by 10 will give me 80,000 shares. Correct, sir. So this I divide by 80,000 shares. So from 2,70,000, first take out 27,000 dividend. Whatever is left out, divide that by 80,000. Some students are saying 3.03. Can others confirm this? Yes or no? Is it 3.03? Remember, EPS is always in rupee. Yeah. Okay, correct. Done. Sub question D. Sub question D. They are asking you price earning ratio, PE ratio. Yes. What is the formula for PE ratio? MPS by EPS. Market price of the share by earning per share. Sir, EPS we calculated just now. So denominator is ready, 3.03. Correct? Good. Where is MPS? I think MPS was given in the question. Where is it, sir? I'm highlighting. See, this market price of equity share is 40 rupee. That means in stock market, it is trading at 40. So this will be 40 by 30.03. 40 divided by, not 30, sorry, 40 divided by 3.03. How much will this be? 40 by 3.03. Around 13 point something. And remember, P ratio is always mentioned in times. How much are you getting? 13 point, roughly 2 times 13.2. That means to earn 1 rupee, people are willing to pay 13.2 rupees. Hope you are able to follow. To earn 1 rupee, people are willing to pay 13.2 rupee. You remember that Maruti Suzuki number was 27 times P ratio. 27 times P ratio. Okay. Yes, sir. Done. Did we answer the question fully? Yeah. Okay. Everyone. Now that we have completed all the practical sums, your homework. I know it is late today for you to do the homework. No problem. you do this homework in next 2-3 days, not a problem. All the questions in part B. Sir, how come all questions in part B today? Because we haven't done any part B question on this. Only one question you did in the class today, and one question we discussed in class yesterday. Correct? If I remember properly, this was the question we discussed in class, question 23. Are we okay? This was the question. And you did one question today in the class, if I remember correctly, it was 24th question in the last class today. Am I right? There were 5 things to find out for 5 minutes. Balance all the questions you can try. Okay, you can take 2-3 days time. Today it's already late and tomorrow all of you have classes. So day after tomorrow, 2-3 days time you take and try to complete the part B of this chapter. Is that okay, everybody? More importantly, we still have syllabus and other things to discuss. All your doubts will be discussed. Not a problem. More importantly, whatever I showed on Money Control website, that is something that I want you to spend time on. Okay. Yeah. I want all of you to check at least 2-3 companies, read those 1 or 2 reports in detail, spend time and read. Yeah. Any company, if you have already purchased those shares or your parents have already purchased those shares, no problem. For learning purpose, you can also go through. Okay. You will have some good observations. You will understand how to read a research report. Okay. Spend some time. Anyway, I'm available for both the batches. I'll anyway be coming to Yashas tomorrow also. Yeah. So if you have any doubts when you read those reports, we can discuss. Get that PDF. Money Control has app also, so you can download the app and start reading and learning more and more. Okay. Yes. Was the session helpful? Yeah. Before we wind up, if you remember a few days back in the class, I showed you one graph of Nifty and gold. Do you remember that? Some 10-12 years long summary. You see today, India's Nifty has gone up almost 1%. Can you see this? Almost 1%. And same today, gold piece, if you see, has gone down 1.4%. Okay. And check last 5 days, continuously gold was on a higher trend and Nifty was on a lower trend. I'm keeping both 5 days graph on sheet. Can you see? It was continuously down, Nifty, and gold was going up. Also see 1 month, 6 months, year to date. On a longer horizon, you'll get a better understanding. Yeah. At least today, if you see, gold is down by 1.5%, whereas Nifty is up by almost 1%. If you remember the opposite correlation, negative correlation, you can see even silver bees today were up. Sorry, silver was also down. Both gold and silver were down. And Nifty is up. This is a common thing that you will notice. And these things you have to continue reading. 1 day, 2 days, randomly checking like this will not give you an understanding. Any big bad news, any big good news happens, check both that day. You will get to know how to, draw conclusion based on what you see. Otherwise, on a normal day, both will be around 0.2%, 0.1%, something. But when something is big, and why it is down, if you go to this news section, you will get to see. In this, don't read 1 month old, 2 month old. You can go to tools and past 1 hour if there is anything, or past 24 hours. It is 6 hours ago. Gold ETF, there is some story. Click on this NDTV profit. You can read NDTV profit, Business Standard, Financial Express, any of these links. Good to read. And here you will have an overall understanding. Okay. All right. Fine, guys. So we have completed the pending sum from ratio topic, and you will try and do in next 2 3 days all the practical sums of this chapter. Correct? Yes. With this, I'll be winding up today's session. About your tomorrow's class, you already know the timetable. However, I will still be sending the message in the Telegram. Okay. All right. Can I close the session? Yes. Right. Everybody, thank you very much. See you again. Bye. Bye. Right. Thank you very much. See you again. Bye.